One of the ways that I found useful to explain the subject of finance and investment is through the lens of football. So using football as a means to explain topics within finance and investments. You'll see it in the different articles that I've written over the years or through lessons like this where I'm teaching the subject. If you think about asset allocation and its three layers of strategic, tactical and dynamic, you can think about it through the lens of a football manager in the Premier League. Right, imagine a football manager is preparing for a big game. They've got a squad of players to choose from. Think of that as your universe of asset classes that you have to choose from when you're building a portfolio. Now you have a fixture that you have to plan for, so you can only pick 11 players. So you pick the best 11 players to achieve your objective in the upcoming fixture. By the same token, when you look at the world and the universe of asset classes that are available to you, you have to pick the best asset classes that fit with your objectives. And there's a range of factors that you need to consider. Most obvious is risk and return, but there's other things that I mentioned like liquidity, etc. Now, when you pick that 11 players, for example, as a manager, you have to set a formation. Now think about that in terms of you have 11 asset classes. You have to build a structure in terms of what percentage you're going to have in each one of those asset classes. So just like a manager is picking a formation and a structure to go out and play an opposition team, you have to set the percentages, what we would call the strategic asset allocation, with those 11 asset classes to try and achieve your objectives. So if you're a high risk investor, you're going to have a higher percentage in equities, etc. And so that mix has to align with your objectives. Now think about when the game has started. The manager has picked his formation, the game starts to unfold, and all of a sudden they see that the left back, let's say, lacks pace. The manager looks at that and says, right, this is an opportunity. We got to put our fastest winger down that side to take advantage of that opportunity, that weakness. That's a tactical switch in the game, right? By the same token, when we look at asset allocation, you've picked your strategic asset allocation, you've set that in place, but you see how market conditions are evolving and you spot an opportunity, let's say in equities. All of a sudden there's a correction in equities and it looks undervalued, and you see the opportunity to increase your allocation to equities at that point in time. Again, that's tactical asset allocation. It's a tactical switch based on an opportunity that you spot at a point in time. Now, there are other Premier League managers, for example, Pep Guardiola would be a good example of this, that are constantly tweaking things through the game. So you'll see them on the sideline making small changes, they're talking to the players. That could be considered your dynamic asset allocation, where you have your strategic asset allocation in place, that fixed structure in terms of the percentage mix, and then you're looking at it in terms of how market and economic conditions are evolving. You have additional information and you feel the need to tweak those percentages constantly to align with your objectives, given the additional information you have as markets are evolving, and you try to take advantage of your new perspectives that you've gained based on the additional information that you now have. That's dynamic asset allocation. So think about that in terms of your asset allocation, your three layers in terms of strategic, tactical and dynamic. I think it's an easy way to understand the fact that what it comes down to is decision making. Your strategic asset allocation is that initial decision that you make in terms of the appropriate mix, just like the manager is setting their formation from the outset. Then things change and you see an opportunity and you need to make a tactical switch. That's another decision that is based on an opportunity that you see arising. And then finally, your more ongoing decisions that you're making in terms of making tweaks to your portfolio, your asset allocation, that's your dynamic asset allocation. It's more frequent in terms of the changes that you're making. So I think that's an easy way to try and understand the three approaches to asset allocation, and it breaks down the jargon that you have in finance through the lens of football, which is much more accessible and easy to understand for most people.